Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is currently 7:30 a.m. Central Time, and I'm recording this in preparation for the market day of January the 5th, 2015. Full disclaimers are at the end of the video, but you should be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into today's reports. First of all, we've had just a little bit of weakness in the overnights. Really nothing to get terribly excited about. All four indices are down about 0.25%. The big story for the overnight action would be crude oil. Crude oil down well over $1 and about 2.43% as of the time I took this snapshot. So obviously for crude oil traders, you've got to deal with a pretty significant overnight move, and you may be approaching kind of a daily range and may very well go sideways and exhaust during the day today. Obviously, check into what created that news event, what created that energy, that momentum, and be on top of that. But you have certainly a circumstance in the crude oil markets. For the rest of us, also be aware of the implications that will have for energy sector stocks. Certainly ExxonMobil and some of the other ones are likely to be moving in gaps at the open, and that will certainly put some impact on the broad market in general. Though you see with the indices, not a lot of impact, relatively neutral to weak coming into the open. In terms of the overseas markets, you see that China way up, 3.59%. So very happy with our FXI position in the core portfolio. Other markets, relatively more tame. The United Kingdom, the FTSE is down 0.77. Hong Kong's down 0.57. So nothing terribly dramatic in the overseas markets, with the exception of China. A 3.59% move in China is a big deal. In terms of macroeconomic reports, we do have no red flag or orange flag in the United States. You see there are a number of other markets that have important things going on. Also tomorrow, we had the non-manufacturing PMI will be on the slate along with factory orders. So that's the primary mover with respect to U.S. markets. If you're in currencies, obviously you've got to pay attention to what's going on in these overseas markets. In terms of the market conditions, primary thing I wanted to mention from a volatility standpoint is obviously Friday we had a standard deviation or greater move in 3 of the 4 indices. We have seen some return of volatility in recent days. So both with the last day of the year as well as Friday's action, we definitely are popping on the volatility, and I would expect that a lot of traders will be back today, and we could see a lot more volume and activity today than has been taking place for the last 2 weeks. The next thing I wanted to draw attention to would be current status of our market trends. We are still phase 3, bull flag, bull flat, higher highs, higher lows. We still have this divergence. I'm not going to spend a lot of time on this. This is the same condition that we've had for the last few days. Portfolio trader posture, uptrend under pressure, and yet our active trader market posture says it's okay to take short-term bullish trades or intermediate-term bullish trades. Because of the divergence, we still have this mix on our position sizing opinion, with one component calling for 0 to 25% and the other one calling for 75 to 100% of full position. Market timing coming into the new year, and with the return of activity and volume, our market timing model right now, 1 day outlook very bullish, 3 day outlook very bullish, 2 week outlook bullish. So we have certainly an opportunity for a pullback somewhere along the line, and we've seen some action that came into that last week of the year that could look like topping and rollover. However, expectations are at this point that this is just about a pullback and then a resumption of the bull market trend. One fib target to be aware of, if you look at the SPX on a daily and you say, well, how far down could this pull? The 61.8 fib extension from the recent highs would bring you back down to about the 2018 level on the SPX. So something to kind of keep in mind as a potential target. Should we get that pullback, that weakness that should follow through and something a little bit more significant, where might that go? 2018 on the SPX would be a first likely target. We do have on our market forecast opinion a very bullish condition. 3 out of the 4 indices are still in the upper zone. NASDAQ has turned bearish, and it's never good when the NASDAQ is bearish and is more bearish than the S&P. So that is definitely a warning sign. And indeed, because of the what NASDAQ is doing, as well as what our uptrend under pressure condition, we still have a threshold level 1 on our hedge warning status. We do have still 7 distribution days in the S&P and 6 on the NASDAQ, including 6 in the recent month of December. So there's certainly some serious warnings here, and we still remain in an elevated threshold level. If we should get some up volume with good volume accompanying it, then this may drop to our normal level, threshold level 0, but that has not happened yet, and you see we still do have a number of significant warnings. VIX phase, intermediate term has been trending down, but short term has been popping up, and I believe we're up over 17 was our high. It looks like our high probably hit 20 on this last Friday, and it closed at about a 17.74 area. Option income strategies are near the upper end of the window in which we like to do option income strategies, but it is within the window, and so nothing really kind of coming from that input. Couple things to mention: our point and figure outlook. This was updated, of course, each weekend, and there are a number of differences here. So members, you might want to dive into the reports and take a closer look at that. From a market sector standpoint, we've seen from the weakness of the last couple days, obviously the short-term market postures have taken quite a hit, and this is nowhere near as green as it was just a few days ago. So certainly some short-term market posture weakness is coming into play. And you see kind of a mixed bag coming into Friday's action, where the utilities were doing very well: telecom, energy, healthcare, and indeed, really, many of these are kind of our long-term favorites in terms of sector rotation at this point at the top, but you do see a couple bounces. For example, energy has been pretty much at the bottom most of the time, and had a fairly significant up day on Friday. That bounce from Friday would look to be probably taken out with the overnight action on crude oil this last night. So energy is probably going to be under considerable stress, and I would well imagine it'll be at the bottom when we take this snapshot at the end of today's trading day. So in terms of key industry sectors, continue to see retail, railroads, transportation, internet, and healthcare as our top 5. So still have same focus there. As always, if you like what we're doing here and you wish for to encourage our continued engagement with providing these YouTube videos and so forth, please like us. We greatly appreciate that. It gives us feedback. Obviously, you can also put feedback on our Facebook page, and you see how to find us and all of your favorite social media platforms. We are on Twitter, Facebook, StockTwits, and Scootify, as well as, of course, this YouTube channel. And as always, emails can also be sent to support@falconglobaltraders.com. And you see the website. Free trials are available to each of our 3 live trading rooms. We have the equity and ETFs room. That's where we have our core portfolio and swing trades. And then, of course, we have an options room as well as a futures room. So more information can be found at the falconglobaltraders.com. Disclaimers. You can pause the video if you'd like to read that in depth. And then, of course, we, as always, say thank you very much from Falcon Global. We greatly appreciate your contributions to our Falcon community. Thank you.